Hello and welcome to ATFX's Australian CPI preview. My name's Nick Twidale, I'm the Chief Market Analyst. And today we're going to look at what's key data for the Australian economy. And we're focusing on the Australian dollar, which has seen plenty of movements over the last few weeks and is probably going to move fairly hard if we do get any discrepancy on this upcoming data. As always, please do subscribe to our channel if you want to be kept up to date with everything that's going on in financial markets. So without any further ado, let's have a quick look at what we've got. So CPI, obviously Consumer Price Index, it is the big one for the RBA. We've had updates from the RBA recently, and we know they're not happy with inflation. Last month's print was a 2.5% increase, probably too high for these guys, and we're seeing expectation of another 2.5% print coming tomorrow. Anything differing, and normally it's by 0.2 or more on these numbers, should see the Aussie move and should see it move quite hard. Now, something else we have to take on is the other part of the RBA's mandate when they're looking at the economy, or one of the other major parts of the economy they're looking at, and that's jobs data. Last week's jobs data did come out weaker than expected. So that's put a little bit of pressure, or maybe taking a bit of pressure off that cutting cycle that they started last month. They really need to see inflation coming down if we're going to see more cuts coming through from the RBA over the coming weeks. So without any further ado, I'm going to take us over to the charts for the Aussie dollar, have a look where there's some trading opportunities and where we might see some of these moves, both on a short-term basis and on a longer-term basis. So here we are. This is the daily charts. So we're looking at the daily charts for longer-term implications and longer-term trading opportunities. And as we can see, we know the Aussies come off very hard over the last couple of quarters. And even from where, and not as hard as some of the other currencies, it has to be said. Aussie's been lagging a bit on the crosses, but we've seen it cap out recently just above that 64.09, I believe, was the high back at the start of February, and then just around 63.90ish where we capped out just recently. We're sitting a big figure below that, around about 62.90 at the moment. And given the fact that we haven't got too much in the way of data coming out for the rest of today, we could get affected by geopolitics, as we know. We're expecting it to probably be around these levels, or certainly within recent ranges when we come to the data tomorrow. So top side, if we get a higher print, if we get a 2.7, a 2.8, even a 2.6, it could see us approach back to these recent highs, and I'll show you in a bit more detail on the short term. And really, the next level of stronger resistance is going to come in on this 200-day moving average. It is a stronger level on the daily charts, and that's coming in around about 65. Much longer term, we're just above 67 cents, just below 68 cents, really, on where we're trading at the moment for that longer term resistance. Probably the better trading opportunity will come on the short term charts, but just to run through, here's that low that we said, that's on the daily. So that came in just underneath 61 cents. Trend line now brings us up to around about that 61 cent level. So there's your parameter for the longer term targets. I'm going to move over now to our shorter term chart, the hourly chart, and this will give us a little bit more insight and a little bit probably of those intraday trading opportunities that most traders will want to get out of this. Here you can see some more relevant shorter term chart levels, and we've come back from that low that I showed you before, just underneath 60.85, just under 61 cents. Joins up with this low, and as you can see here, we've based around about this kind of trend line level recently on the last few dips over the last few days. So it is a relevant trend line. So expect initial support to come in just above 62.50. But if we do get a really weak number, so we're looking for 2.5, if we get a 2.1, a 2, even a 2.2, expect this to be challenged quite swiftly, and a break to open the way, maybe to challenge those sort of lows that we've seen just earlier in March, and then obviously those yearly lows. Conversely, of course, your top side opportunities. Now, as I said, 200-day moving average on the dailies does become more relevant, and you can see that here on how this has moved on the hourlies. But it will probably, if it's just a slightly higher number, a 2.6, you'll probably find a little bit of resistance coming in around about this 63.17 level, and then much stronger resistance on the trend line at 63.60, and then these are those highs I was talking about before, just below 64 cents, and then that 64.09 that we got in February. So keep an eye on those. We'll probably see those if we do get a 2.6. If we get like a 3, that really will take cuts off the board from the RBA. and we're back looking at them coming back in, probably more hawkish. I don't think we're going to get that tomorrow. My leaning is that we might start to see inflation just drift lower. So I'm favouring something either. Naturally, I'm probably going to go with what we're all expecting, that 2.5. But I think if we get a 2.4 or 2.3, we might revisit these lows, and there's an opportunity, especially if the dollar starts to appreciate, that we get a break of these levels. It'll provide a good trading opportunity for a move down to just sub 62 level, and then we're looking around about the 61 cent level. So that's where we are. Key data. RBA has been banging on, like most central banks, about inflation. If we get something significantly from that 2.5% print, expect big moves in the Aussie dollar this time tomorrow. Thanks very much for listening. And as always, if you need anything from us at ATFX, please do let us know. Thank you very much.